If you're looking for a simple, easy way to become a millionaire, look no further. Investing $40 a week in an index fund could be the secret to your financial success. Index funds are low-cost, diversified investments that can help you to build wealth over time. In this video, we'll explore how investing just $40 a week in an index fund can get you on the path to becoming a millionaire. How much you need to save. The key to becoming a millionaire by investing is to consistently put away money every week. By starting with just $40 a week, you can slowly build up your wealth and see significant returns in the long term. But how much exactly do you need to save? The answer ultimately depends on your time frame and financial goals. For example, if you're looking to become a millionaire within 10 years, you'll need to save much more aggressively than if you have 30 years to invest. However, a general rule of thumb is to aim for saving at least 10% to 15% of your income. One approach to determine your weekly savings target is to work backward from your ultimate financial goal. If you want to become a millionaire in 20 years, assuming a 7% annual return on your investment, you'll need to save roughly $117 per week. That might sound daunting, but remember that you can start small and increase your contributions as you gain momentum and earn more income. The key is to make saving a consistent habit and prioritize it alongside your other expenses. It might mean cutting back on discretionary spending or finding ways to earn extra income to put towards your investment account. But by setting a realistic savings goal and sticking to it, you can become a millionaire by investing $40 a week. Time frame. While investing $40 a week might seem like a small amount, it can quickly add up over time. The key to becoming a millionaire with this strategy is to stay disciplined and commit to it for the long term. Assuming an average return of 8% annually, it would take about 37 years to accumulate $1 million by investing $40 a week. This might sound like a long time, but remember, the earlier you start, the better. Let's say you're 25 years old and start investing $40 a week in an index fund. By the time you reach age 62, you'll have amassed over $1 million in your portfolio. This is based on the assumption that you never increase your contributions and don't factor in any other income or savings. If you're already in your 30s or 40s, don't worry. It's never too late to start investing. Even with a shorter time horizon, the power of compounding can still work in your favor. For example, if you're 40 years old and start investing $40 a week, you can still accumulate over $300,000 by age 65. This assumes the same 8% annual return and a consistent $40 weekly contribution. The key takeaway is that time is on your side when it comes to investing. The earlier you start and the longer you stay invested, the more wealth you can accumulate. So don't wait any longer. Start investing today and reap the rewards of a financially secure future. Why $40 a week? Many people think that investing takes a large sum of money to start with. However, the reality is quite the opposite. You don't need to be a high net worth individual to start investing in the stock market. In fact, you can start with just a few dollars a week. But why $40? Investing $40 a week for 30 years will yield about $335,000, assuming an average annual return of 7%. If you continue investing the same amount for another 10 years, your investment would grow to about $670,000. This may not seem like a lot when you compare it to other investment opportunities. But the beauty of investing in index funds is that they have low fees, high returns, and are diversified, which makes it a perfect long-term investment option. By investing $40 a week, you can accumulate wealth and become a millionaire. However, the key to achieving this is consistency and patience. By making regular contributions to your investment portfolio, you will be able to take advantage of the power of compounding. Investing small amounts of money consistently over a long period of time is an excellent strategy for achieving your financial goals. Even if you start with just $40 a week, you can achieve great things with your investment portfolio. Where to invest? Once you have decided to start investing, the next question is where to invest your money. One of the most popular investment options is an index fund. An index fund is a type of mutual fund that tracks a particular stock market index, such as the S&P 500 or the Dow Jones Industrial Average. Investing in an index fund gives you exposure to a diversified portfolio of stocks, which helps to reduce the risk of investing in individual stocks. You can invest in an index fund through a brokerage account, either online or through a traditional broker. Most online brokers offer low fees and easy-to-use platforms for investing. When choosing an index fund, it's important to look at the fund's performance history, management fees, and other expenses. Another option for investing is a robo-advisor, which is a digital investment platform that uses algorithms to manage your investment portfolio. Robo-advisors offer a low-cost way to invest in a diversified portfolio of stocks and other assets. They also provide automatic rebalancing of your portfolio to ensure that your investments remain aligned with your goals. Finally, you may also consider investing in a retirement account such as IRA. These accounts offer tax benefits and are a great way to save for retirement, while also investing in the stock market. In summary, there are many options for where to invest your money, but investing in an index fund is a great place to start. With a low investment amount, you can begin building wealth and reaching your financial goals. Diversify. While investing in an index fund is a great way to build wealth over time, it's also important to diversify your portfolio. This means spreading your investments across a variety of asset classes, industries, and geographies. Diversification helps to reduce your overall investment risk. By investing in different areas, you're less likely to suffer major losses in any one sector or industry. Plus, diversification allows you to capture different returns from different markets, which can improve your overall investment performance. One way to diversify your portfolio is to invest in exchange-traded funds. These are similar to index funds, but instead of tracking a specific index, they track a basket of different securities. Exchange-traded funds can give you exposure to different asset classes, like stocks, bonds, and commodities, all in one investment. Another way to diversify is to invest in individual stocks or bonds. While this carries more risk than index funds or exchange-traded funds, it can also provide greater rewards if you pick the right investments. Just be sure to do your research and understand the risks before investing. Overall, diversification is key to long-term investment success. By investing in a variety of different assets, you'll be better positioned to weather market downturns and capture opportunities for growth. So while you're investing that $40 a week, remember to diversify your portfolio to maximize your potential returns. What do you think of our video? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.